brand new category for us. We believe this new line will excite our consumers and grow the value of our functional products in their daily lives. You can now find our Celsius Hydration on Amazon and at a growing number of retailers. E-com and food service continue to be a strong channel for us, and Celsius is regularly among the top brands on Amazon. Starting in March, Celsius will begin to be sold in certain Subway restaurants, representing a total opportunity of 18,000 locations nationwide. Celsius also gained distribution in Home Depot, which is another strong, non-traditional customer. Our portfolio is strengthened even more with today's exciting news that Celsius has agreed to acquire leading female-focused functional wellness brand Alani Nu. Before talking more about this great opportunity, I'll hand it off to Jared to provide some details on our fourth quarter and full year financial results. Jared?
Thanks, John. Our fourth quarter in several ways returned us to more traditional results after a very uncharacteristic third quarter of 2024, such as our solid gross margin. However, there were one-time costs related to our big beverage acquisition, expenses related to the creation of our new Global Center of Excellence, as well as several one-time costs, including legal settlements and penalties paid to our co-packers that impacted results. In addition, our top line was impacted by some promotional allowances, as well as the impact of a fully implemented incentive program with our largest distributor, as well as some timing of orders. This resulted in revenue and adjusted EBITDA each declining 4% in the fourth quarter compared to a year ago. With that said, our quarterly gross margin improved 240 basis points to 50.2% as a result of lower freight costs and savings on the purchase of raw materials, and our adjusted EBITDA margin was flat at 18.9%, each on a year-over-year basis. SG&A in the fourth quarter increased 73% to $185 million, primarily due to accrued legal expenses related to a case we have on appeal, as well as one-time restructuring and co-packer charges. We recognize the net of Alani Nu. And with that, I'll turn it back to you, John.
Thanks, Jared. I'm excited to talk to you today about the acquisition we believe will create significant value for our company and our shareholders. We entered into a definitive agreement to acquire Alani Nu for $1.8 billion, comprising of a mix of cash and stock. The acquisition represents a unique opportunity to enhance the Celsius platform with a complementary, profitable, better-for-you lifestyle energy brand focused on a differentiated consumer segment within the category. Alani Nu is a growing female-focused brand that delivers functional, great-tasting wellness products for a growing community of millennials and Gen Z consumers. Alani Nu stands out for its authentic brand voice, bright and playful flavors, and unique connections with its community of consumers. They combine functional benefits with a fun, approachable personality, making wellness aspirational yet accessible. The transaction delivers several compelling strategic benefits. First, together, we create a leading, better-for-you, functional lifestyle platform at the intersections of consumer megatrends. With the addition of Alani Nu, the combined Celsius platform delivers pro forma $2 billion in sales in 2024 across a differentiated energy portfolio that is firmly aligned with the ongoing consumer shifts towards premium, functional beverage options that cater to health and wellness and active lifestyles. Second, this deal combines two growing, scaled energy brands with clear category tailwinds. The transaction is expected to enhance Celsius' position as an innovative leader in the large growing energy category, which is projected to grow at a 10% CAGR from 2024 to 2029. Third, the deal provides complementary brand positioning and gives us expanded access to a fast-growing, wellness-focused audience that is driving incremental category growth. Fourth, our combination leverages our strengths and capabilities to drive our next phase of growth. The added breadth of the combined platform is expected to further strengthen the company's position with ample resources for ongoing growing investment. Both brands will be well positioned under the Celsius platform to drive continued distribution gains, access consumers in growing adjacencies, drive innovation and brand awareness, and achieve incremental category growth and propel further global expansion. Finally, the combination enhances Celsius' top-line growth algorithm and is expected to be cash EPS accretive in year one with a meaningful synergy of opportunities. Additionally, we expect $50 million of run rate of cost synergies to be achieved over 2 years post-close, contributing to a strong pro forma profitability and significant cash flow generation. We see significant growth potential by applying Celsius' strong channel and digital marketing, product development, and expansion strategies to help Alani Nu grow. We see opportunities to continue to grow Alani Nu's national distribution, including in key coastal metro markets, drive continued flavor and format innovation, and expand globally. We also expect to drive continued innovation and product development to draw more consumers into the wellness lifestyle that Alani Nu offers. Additionally, we believe that we will each benefit from our combined strengths at retail and significant resources to continue to invest in the growth opportunities. Upon closing, Alani Nu will operate within Celsius, and key leaders from Congo Brands, which operate Alani Nu, have agreed to continue as advisors to Celsius to help ensure continued business momentum. The agreement has been approved by the Celsius Board of Directors. The transaction is subject to customary closing conditions, including regulatory approvals, and is expected to close in the second quarter of 2025. In short, this combination advances our strategies, strengthens our position, and paves the way for long-term value creation. Celsius was a pioneer of the better-for-you energy category over 20 years ago, and we are thrilled to expand our portfolio with the acquisition of Alani Nu. Importantly, following the transaction, we will have ample balance sheet capability for additional growth investment. We believe we have the right strategy to drive sustained long-term growth, and the acquisition of Alani Nu is expected to strengthen Celsius' position as an innovative leader in the large growing global energy category. And now I'll turn it over to Jared to talk more about the financial terms of the transaction. Jared.
Thank you. As John mentioned, we're excited to partner with Alani Nu to create a leading better-for-you functional lifestyle platform. Under the terms of the agreement, Celsius will acquire Alani Nu from co-founders Katie and Hayden and Congo Brands co-founders Max and Trey for $1.8 billion, comprising a mix of cash and stock, including a potential $25 million earnout based on 2025 performance. This includes approximately $150 million net present value of tax benefits for a net purchase price of $1.65 billion and represents an attractive valuation of less than 3 times 2024 revenue of $595 million and approximately 12 times fully synergized Alani Nu 2024 adjusted EBITDA of $137 million, which includes approximately $50 million in synergies across our supply chain, utilization of our sales force, and back shop infrastructure. The purchase price consideration is comprised of approximately $1.275 billion of cash and a $25 million earnout and $500 million of newly issued restricted shares of Celsius Holdings common stock, representing approximately 8.6% pro forma ownership. We intend to fund the cash consideration using a combination of $900 million of fully committed debt financing and approximately $375 million of cash on hand. We expect that our liquidity position will remain strong following the transaction with a pro forma net leverage of approximately 1x with ample cash on the balance sheet. This allows us to continue to opportunistically pursue growth investments that drive shareholder value. Stock consideration will be subject to a lockup agreement, which will be released over a 2-year period, aligning long-term interests to drive future growth and value creation. At closing, we will enter into a transition services agreement and certain consulting agreements to help retain key brand leadership and support the integration process. We look forward to keeping you updated on the progress of the deal in the coming months. With that, we'll open up the line for your questions.
Thank you. We will now begin the question and answer session. If you have dialed in and would like to ask a question, please press star 1 on your telephone keypad to raise your hand and join the queue. If you would like to withdraw your question, simply press star 1 again. If you are called upon to ask your question and are listening via loudspeaker on your device, please pick up your handset and ensure that your phone is not on mute when asking your question. We do request for today's session that you please limit to 1 question. Again, press star 1 to join the queue. And your first question comes from the line of Kaumil Gajrawala of Jefferies. Please go ahead.
Hey guys, good evening. Can you maybe talk about the positioning of the two brands and how you plan to solve for maybe any overlaps or how differently they may or may not be positioned?
Yeah, well, great question. We're excited about the addition of Alani Nu into our portfolio at Celsius Holdings. The Alani Nu brand has a very, very unique consumer base, which is incremental to our overall portfolio and complementary to Celsius. It's targeting a younger female consumer that really is aspirational. It's also accessible, and it revolves around health and wellness and fitness. Their social media, as an example, is about a 92% female following. And when we look at really any cannibalization potential, it's fairly low. We actually see a much higher trade in between brands, looking at some of the top tier brands in the category as well. So this is truly incremental. Alani Nu has been also contributing to the category growth rate. So this positions us with 2 great portfolios to go after the modern energy category.
Okay, got it. And how are you guys thinking about distribution? Is your preference to keep Alani Nu through the AB network and have sort of 2 major customers and maybe don't have to deal with some of the inventory issues as you have before, or is the preference to consolidate it in along with Pepsi, and then maybe is there any involvement by Pepsi either financially or how things are operating going forward?
Yep. We're just announcing today the transaction. It's got to go through customary closing procedures and regulatory approval. We're expecting it to close sometime in the second quarter. The ABI network they're in is a great network, and it's been an amazing partner for Alani Nu. And we're really focused on the consumer and the customer right now, and growing the respective businesses together.
Your next question comes from the line of Jim Salera with Stephens. Please go ahead.
Yes, good afternoon. Thanks for taking our questions. I wanted to maybe drill down on how you think Alani Nu is going to add incrementality and maybe offering a little bit more focus on the Celsius piece of the portfolio. And what I mean by that is if we look at the overall energy drink category growth, obviously the Celsius consumption growth and the scanner data has come down. Should we kind of expect the legacy Celsius brand to grow in line with the category and then Alani Nu to be kind of the incremental lift there? or do you expect the Celsius brand to get back to above trend growth, and then have the Alani Nu brand come over the top and kind of complement that as well?
Yeah, no, absolutely, Jim. I mean, if you look at the scanner data, we got off to a slow start in Q1 with timing of promotions versus what we were cycling last year and innovation. We have a robust innovation strategy with the Celsius portfolio in 2025 and really excited about it. We feel really bullish, especially the way the portfolio is positioned with better for you, fitness lifestyle, the 50-50 mix, approximately male and female. We are well positioned to capitalize on the trends in health and the energy category. And the category in 2024, tipping to greater than 50% of the category now is sugar-free with a Celsius portfolio. We see great tailwinds to continue to drive that business forward in that portfolio. When we look at Alani, and you look at where it is in its growth cycle and distribution, it's really about, almost where Celsius was 2 years ago. There's a lot of additional ACV to unlock, especially untapped in food service and also in convenience. So there's a lot of opportunities with both brands, and both brands are going to be incremental to additional revenue growth and profitability.
Very great. And then maybe if I could just sneak in one quick follow-up. I'm sure there'll be a lot of questions on the energy piece of Alani, but I know they also have, a kind of a powders and an RTD shake and a snacks portion of the portfolio. Just any thoughts on how you plan to kind of fit that in with the broader portfolio that's energy centric?
Well, it really gives us, both these brands together offer a better for you platform. There's a lot of opportunities, especially with Alani, expanding into adjacent categories. And, I think that opens up scale. Health and wellness continues to grow and become part of the daily lifestyle of all of our consumers. So it's incremental on a go-forward basis.
Great.
Your next question comes from the line of Peter Grom with UBS. Please go ahead.
Thanks, operator. Good evening, everyone. So I wanted to ask on just maybe, what to expect as we look out to the spring here, just in terms of shelf resets. And, I'd be curious, can you just talk about what you're expecting for kind of the core Celsius brand, particularly as velocity trends have been a bit more challenged. And then, specifically, do you have any visibility at this point in time around what you were expecting for shelf space gains for Alani Nu?
Yeah, with our the Celsius portfolio coming up, we expect roughly around 15 to 20% expansion in distribution within our given retail sets coming out of NACS, and expansion we're seeing in large format as well. You're seeing a lot of grocery and large format lean in even heavier in energy. So we're really excited about that, where this category is evolving. The energy category, keep in mind, is getting to be a much larger portion of total LRB and the beverage categories. And you're seeing the retailers in large format move into that space, trying to take advantage of the consumers, which are stocking up on 12 packs and variety packs. You're seeing that now more and more. The energy category has evolved is evolving from immediate impulse purchase to part of a daily lifestyle and daily routine, and large formats taking advantage of that opportunities. So about 15 to 20% we expect. Also improved placement within retailers is really key. We're working on, we got to get more cold placements. We got to continue to disrupt the path to purchase with Celsius portfolio. And then Alani is expecting pretty sizable distribution gains as we are entering through the reset season, especially in the convenience channel.
Your next question comes from the line of Eric Serotta with Morgan Stanley. Please go ahead.
Good afternoon, and congratulations on the deal. A quick follow-up on the distribution side. Does Pepsi have any right of first refusal for distributing other brands that you buy? And if hypothetically Alani were to change distribution networks, who would be responsible for the distributor buyouts? And then turning to the business, what was the change in Pepsi inventories in the quarter? And, I guess, what are your expectations as you look to the first quarter? Thank you.
Yeah, just a comment in regards to, the distribution, kind of answered that before. Right now, we're focused on closing this transaction. We're focused on servicing customers and retailers and suppliers. That's our main focus right now. The companies are running separate until closing. But I'll let Jared comment on the inventory levels in the Q4.
Yeah, so it was between 8 and 10 million in terms of the impact.
Your next question comes from the line of Gerald Pascarelli with Needham & Company. Please go ahead.
Great. Thanks very much for the question. Congratulations on the deal. John, maybe a question just on the basis for the transaction. Essentially, how do you put the transaction in the context of the near-term slowdown that you've seen in your core portfolio? I guess said another way, did the near-term slowdown expedite the process for you to get more aggressive with M&A and buying scale, or is this something that you've always viewed as an attractive asset, have been contemplating for a while, and decided now is the right time? I guess just some color on how the deal materialized would be helpful. Thank you.
Yeah, no, great question. And we are extremely confident in the Celsius portfolio and leveraging the tailwinds we see in the energy category. We recognize we're off to a slow start. The innovation that we have planned for 2025, we're extremely excited about it. The portfolio continues to resonate with a broader consumer. And it's great flavors, great innovation. The fitness lifestyle is strong, and the Celsius portfolio is strong. The opportunity came up with Alani Nu. It really is incremental to our consumer base. When you look at it, we really admire what they've built. And when you're building scale, we are right now a solid number 3 player in energy. And a combination of these two great brands together puts us at about approximately a 16% share in the energy category. We built an amazing company here. Mentioned in Q4, Jared talked about it in his prepared remarks about vertically integrating with our co-packers. We have synergies and opportunities. We're focused and disciplined to drive shareholder value, gain leverage through the systems and processes and infrastructure we've built, and it's a natural fit for us.
Your next question comes from the line of Andrea Teixeira with JP Morgan. Please go ahead.
Thank you, operator, and good afternoon, everyone. I just wanted to follow up on the most recent consumption trends for Celsius in particular, and if you can comment also on Alani. How have you spent so far in the quarter, interquarter, and when should we see improvement in terms of velocity? I understand that obviously there is a offset from gaining distribution. And related to that, also, how has been the reception? I know you're lapping a very strong innovation, as you mentioned, but you also have a strong pipeline coming up. I understand that mainly the convenience stores were quite receptive from the fair, that you're getting good reception for the innovation, but just wondering all these dynamics of distribution with Pepsi, how we should be seeing this improvement, if any, or should we expect that to be more evident in the second quarter for both brands? Now, also a comment on Alani. Thank you.
Okay, excellent. A lot to unpack there. In regards to the Celsius portfolio, like I said, we're confident in the Celsius portfolio. We have some weakness in Q1. We are cycling some pretty high hurdles from prior year with the launch of the Essentials line and some really strong innovation in Q1. We have an innovation-packed back half and into the summer selling season, into the summer beverage season. We're excited about our innovation. We have some great properties we'll be leveraging and tentpole programs. I mentioned in the prepared remarks, our recent award we won at 7-Eleven. We're partnering with retailers. It's really a timing. And then the incrementality with Alani, it's going to be incremental, and they're gaining distribution. They're resonating with a unique consumer segment in the energy category, which continues to get broader. Energy has gone mainstream. It's not as niche as it used to be. Health and wellness trends are here. We're actually presenting at CAGNY tomorrow, And everyone's talking, all these consumer brands are talking about health, wellness, the growth of sugar-free. We have two of the greatest portfolios in beverage that are sugar-free and aligned with the health-minded consumer. So we're excited about where we're headed with this portfolio. It's a great combination.
Your next question comes from the line of Michael Lavery with Piper Sandler. Please go ahead.
Thank you. Good evening. I had top of my list what you're going to do with your cash, but I think I'll skip that one now and just maybe see if you could unpack the share trends from 24 a little bit. You obviously had sequential some pressure, some pressure sequentially over the course of the year. Not meant as an Alani question, but it certainly could be related. Any just diagnosis of where share was going, or how to think about what really made some of those changes and how to best address it. And then maybe if you could also just if I could ask a quick follow-up on the Subway news. You said that it'll go to some of those outlets. Is it each franchisee's option or decision? How do we think about how that might unfold?
No, great questions. When you look at, we started to see some challenges, and the whole category was under challenge in Q3. We were impacted when the category went negative for the really first time in many years within growth. We also saw really steep competition come in the sugar-free category from some of the top players that are getting trial. But with our refreshing Celsius portfolio and a strength of our great ingredients and our positioning, the Better For You Healthy Halo, we feel we are well positioned for this category to evolve. Getting trial on new flavors, consumers are trying new flavors that are out there, and you saw that with two of the top major players leaning heavily in sugar-free. But we have a sustained, long-term, loyal consumer. We have strategies to build upon that, and it's going to come to fruition in 2025 with a great innovation portfolio that we have planned, and some of our targeted marketing initiatives, and also broadening our reach. We're broadening some of the consumer segments that we're going after and targeting with our strategy of more people, more places, and more often.
Your next question comes from the line of Sean McGowan with Roth Capital Partners. Please go ahead.
Thank you. I was wondering if you could tell us how much the promotional allowances that you talked about in the past impacted both revenue and gross margin in the quarter. And then more generally, do you think this is a level of gross margin that could be sustained, particularly with the aluminum in the background?
Yeah, a great question around promotional activity. The category is highly promotional. I'll throw it over to Jared to talk about some of the promotional activities.
Yeah, in terms of the leverage of the promotional activity with some of the noise around timing from distributor orders, we did see a little bit elevated, call it contra revenue across 2024 versus 2023 and even 2022. We look to get that back on track next year. We will have the incentive plan fully in place in Q1, Q2, Q3, Q4 was already baked in, but you'll see a little bit of extra incentive in Q1 and Q2 because it was a phased-in approach. But we will also be benefiting from the full implementation of the program around things like inventory on display, priority periods, those kind of things like that. So we look to that to get back kind of to the more normalized basis. As it relates to gross profit, we are evaluating, all the various things. The tariffs are in, the tariffs are out, those kind of things. We think we're somewhat, we're in good shape as it relates to a lot of the pieces. We don't think the aluminum from up north coming in would significantly impact us, although there could have some impact. And could that pull the margin back a little bit? Definitely. I think we've shown this year that we're pretty resilient in order to get that 50% on a full year basis. So, although I prefer to be conservative and say, could it be high 40s with the tariffs? I think 50% is a solid number from that perspective. And then as it relates to Alani Nu, we'll look to talk more about kind of their margin profile when we get after we close. I think right now it's too early to really bake that in. There is some data on the investor deck that you can see kind of their profile, at least from an EBITDA margin perspective and a revenue perspective. And when we're fully synergized, we'll look to be leveraging the business and look for it to be incremental from a margin perspective.
Your next question comes from the line of Kevin Grundy with BNP Paribas. Please go ahead.
Great. Thanks. Good evening, guys, and congrats on the deal. Jared, I wanted to pick up on that line of questioning around margins. Two-part question. So just on the $50 million in cost synergies, maybe just identify key areas, how much visibility you have, is there any potential upside there? And then understanding you may want to be a little bit hesitant, is there any reason, at least in principle, why the combined business, your EBITDA margins should not look something like Monster's EBITDA margins in the U.S.? So your thoughts there would be helpful. And then I have a quick follow-up for John. Thanks.
Yeah, like John said, they're kind of 18 to 24 months behind us in terms of what our profile was, where we are in our life cycle and where they are in their life cycle. So we definitely see opportunity to further leverage that business. The synergies are hard costs in terms of, not just kind of picking a percentage of revenue or anything. So we're looking at COGS. We're looking at different, using our scale and some of our competitive purchasing power, and then also specific to looking at our sales force, which we were 500 strong, and really leveraging that. Our global supply chain, where we have our global HQ, where we have kind of a supply chain, a procurement program, et cetera, that will really be able to drive savings. So between those areas, and then some back shop, of course, as well. And then what was the second part, Kevin?
I'm sorry, Jared, that was helpful. If you, I know there's a lot of folks on the call. The quick one for John is just, obviously a lot of deals fail. And so my question is really around, you don't need to be redundant on the distribution piece. There's a little bit of wait and see, and, maybe this comes out of the AB system and into Pepsi. We'll see. But how do you limit integration risk as it pertains to this deal? What are you most concerned about? What would you share with investors in terms of managing that to ensure that this goes smoothly and there's no bumps in the road?
No, I mean, we're extremely focused on that, Kevin. If you recall, the way the company integrated into the Pepsi distribution system, we were really praised on how focused and strategic we were on that. We didn't have any hiccups within retail, and I think the same rigor and discipline is going to be used on this integration. In addition, the founders are working with us on the integration, and we'll be, as Jared mentioned, we'll be working on a transition agreement for 2 years, making sure the brands are fully integrated. We're driving the synergies and getting the success and maintaining these brands. So we feel very confident in the integration. And they also, keep in mind, they have stock in the company. So we're all aligned to make sure the integration is 100% successful. And we all have the same vision: disrupt the beverage category, drive the energy share, and make this an extremely successful company.
Your next question comes from Mark Astrachan with Stifel. Please go ahead.
Yeah. Hey, thanks, everyone. I guess, the one question that I've been getting that I'm trying to figure out is, how do you maintain the momentum that Alani has had? If you take a look at their market share gains, they've kind of doubled where they were at the start of the year. Maybe talk a bit about what has driven those share gains from a consumer perspective. It seems from the outside in, maybe a little bit of those share gains would come at Celsius's expense. And so, maybe talk about how you think about sustaining that consumer and what gives you confidence that spending what you are on this deal, that you can keep those consumers kind of over the next several to many years. Thank you.
Well, as I mentioned on the prepared remarks and in the prior questions, we are confident that the two portfolios combined will add strength in the category, and that the Alani consumer is incremental to our total portfolio. As we know, the consumers in the energy category are loyal. The brand in Alani has a true identity, and it's connecting in an emotional level with consumers. And this consumer segment of Gen Z, female millennials, is real. And it's demonstrated that over the years. There's a massive growth opportunity as the energy drink consumer continues to broaden. The category has gone mainstream. And it's not just a male-dominant category. It is going after all consumers, all ages. And it's the modern day for the energy category. And we've built a modern portfolio to take advantage of the opportunities and the tailwinds we see.
Your next question comes from the line of Jeff Van Sinderen with B. Riley Securities. Please go ahead.
Hi, everyone. Let me add my congratulations. John, I wonder if you can tell us what the ACV of Alani is today, and also do they have any international penetration? And then if we can just switch to marketing for a minute this year, thinking about the Celsius brand, how you plan to broaden your reach with marketing, and then how might that change with Alani?
Yeah, in regards to Jeff, in regards to the international opportunity, that's massive. They have a small amount of international distribution. And when you're looking at, the opportunities, even with Celsius, we just expanded internationally into UK, Ireland, Australia, New Zealand, and France. And we're just getting started in the first innings. So both brands have a tremendous opportunities to capitalize on the growing health and wellness trends in the energy category, which in 2024 was approximately $90 billion and growing at an expected CAGR from 2024 to 2029 at 10%. So it's a really great category to be in, and both these brands positioned to attract new consumers coming in and broaden the energy category overall. As I mentioned, it's gone mainstream.
Due to time constraints, that concludes our Q&A session. I will now turn the conference back over to Celsius Chairman and CEO, John Fieldly, for closing remarks.
Thank you, operator. Thank you to everyone who joined us today on the webcast this afternoon. Celsius continues to grow the energy category with our great tasting, refreshing beverage that is on trend for today's consumer, shifting towards premium functional beverage and options and health and wellness and active lifestyles. Over the three growth drivers, driving more people in more places more often, we will guide us to the future. And we now see further expansion with the opportunities of Alani Nu to double down in the category that we see leveraging the tailwinds. Make it a great way, make it a great day. Go grab a refreshing Celsius and Alani Nu, and let's live fit.
This concludes today's call. Thank you for joining. You may now disconnect.
Well, guys, I expected a turnaround for the fourth quarter. I did not expect this, so I'll just be blunt there. I've had a couple hundred shares that I've been accumulating through Wish. They hopefully, let's see if they have the. I'm not done. Let's see if they have the earnings presentation on the site. Not yet. Dang. Really? Okay, they do. Let me move this over and reshare my screen. Moral of the story is I'm just surprised, to be very blunt with everybody. I was expecting it to be a good quarter. I was not expecting it to be this good of a quarter. Where the heck is it? Chrome tab. Where is it? Celsius. Is it this? No. What the F? That's fine. I can share. Oh, I didn't open it. That's why. I was wondering why. It looks strange. There we go. Appreciate everyone's patience. So yeah, I was expecting a good quarter. I was expecting a turnaround. And what I was expecting was about 1.35 billion in revenue. That's about where they came in. So the revenue was good. It was slightly under by about 10 million compared to what I thought it was on the low range. And they did note, and I wrote about this in my Seeking Alpha article, and I might as well just post that in the chat. They did note that there could be a pressure associated with the revenue. They were basically assuming flat to slight increase, single digits on the quarter. And it turns out that $15 million pressure did actually show up as expected. And so that wasn't necessarily something that was a surprise, I guess, to analysts. And they may have gotten more information post the the third quarter earnings call than I did. But I think the one thing that I was always kind of looking at was, will gross margins, kind of go back to normal? Because if I look at where my notes were for the third quarter, let me unhide these things now. The third quarter margins got down to 46% on a gross basis. And so that was no bueno. And then obviously net income margin decreased to about 2.5%. So obviously net income margin increased back up pretty substantially for the entirety of the year to just north of about 10, 11%. And so that's good to know. And then the EBITDA margin obviously closer to 20%. And so I'm anticipating, once you get a little bit more revenue out of the company, that'll climb into the mid-20s, maybe even the 30s, knowing that you have a gross margin of about 50%. So my hope is that over time, and it might be dragged a little bit, as we kind of noted and heard, with the addition of Alani, which I think was really impressive. I knew they were growing, but the fact that you've seen Alani grow to this extent. So this is year over year from 2023 to 2024, all brands that are kind of pertinent in the top 10. So Celsius was number one in terms of year over year growth. So it grew 22%, 2.7 kind of retail sales in total. And then you have 800 million associated with Alani, 64% year over year growth, which is pretty damn impressive. You even have Monster shrinking, which I thought was interesting. But the combined retail sales, if you were to look at what you have here versus what you're actually getting with Alani, is like, closing in on 4 billion, which is pretty impressive if you think about where Monster is. So it's really closing in on Monster. Keep in mind, Monster has Monster, they have Reign, and I think they also own NOS. So they own these three products here. But overall, they're doing single-digit growth and actually declining slightly. Rockstar is owned by Pepsi. Let me just double-check that I'm sharing. Yep. Rockstar is owned by Pepsi. So for those of you guys that are curious about, Rockstar, down 71 million. So it's actually losing market share. And I'm wondering if part of that is because they're trying to what's the word I'm looking for? They used to be, I think, like $2.50, $3. Every time I've seen Rockstar now, they're like $2. So they've shrunk the price. I don't know if that's strategic or or what, but there's that. But if you look at this particularly in total, you had about 700 million year over year growth, actually almost 800 million year over year growth with just these categories. So it's double what Red Bull was growing at, which was 5%. I mean, they're the leader, obviously, by a pretty large margin, 8.4 billion in terms of total sales. So overall, it's interesting to see this particular piece, but you probably heard them say, like, Alani, if they kind of had the information back here, yeah, they're where is it at? They don't have it here. But their net income from Alani is obviously trailing behind that of Celsius on the left. So on a combined basis, Celsius is currently about 2x the size of Alani, but Alani's growing at 60% versus the 20 odd percent that we saw for Celsius over the last year. So a massive slowdown from 2022 to 2023. Obviously with what we saw, and then obviously part of that, being hampered by what happened with Pepsi. Now, does what we're kind of seeing, allow Alani to really come in and couple with getting the entirety of the company back to growth? I don't necessarily know. The thing I was kind of a little bit more frustrated about was the fact that EPS showed up a little bit less than I expected on a non-GAAP basis. On a GAAP basis, obviously with what's been going on with the stock price, it basically running up 70% in the beginning of the year in 2024. Everybody remembers it went from like the mid 40s, low 50s to all the way up to $90, $95, 70% increase very quickly, and then all the way down to the low 20s, literally as of last week, a 70% decrease in the stock price. The SEC said, "Hey, we're investigating this. There's obviously a pending lawsuit, etc." And so with that, it's a little bit harder to kind of understand, what exactly is going to come from that. But that's the reason why the EPS was negative from a GAAP basis, because they took a lot of those costs and everything up front. But interesting to see. I was not expecting the news to show up so positively. So shout out to the people that were in my WhatsApp group. I shouted this out earlier today that I was just taking a quick gamble. I knew that something was going to turn around. I mean, it was evident. It was oversold. The company has been oversold for quite some time. And so it just didn't make sense, it being oversold the way it was. Let's just take the last year, for example. Yes, I get it. If you look at the fact that you've had a kind of flattening of the revenue, etc. But if there's any growth in particular for Celsius, which we've now seen, it makes sense for the price to earnings to kick up a little bit. So if you were to exclude the cash that was on hand, which they had over $1 billion, I'd actually be curious to dive a little bit more into the 10Q, but as of 3Q, they had close to $1 billion. And we know that the fourth quarter, they were cash flow positive again. So they're adding cash back to the balance sheet. In that respect, they were able to purchase a lot of Alani with cash, which I think is important because the initial news of, I think, Alani being bought for $1.8 billion, people are probably saying, all right, that's why I think the stock was down massively in the after hours. Not massively, but it got down to like 10% down after hours. Into the 22s at one point. So we closed at about 25 flat, went down to the 22s, which, is probably over 10% loss in the after hours. And if you think about what ended up happening was the earnings hadn't come out yet. So I think the details around what the purchase was, how the transaction was being handled, etc. So what they're basically stated, if you looked at this actual pro forma towards the end of this, they outline the purchase price $1.65 billion for the company. There's some taxes associated with it, so they're getting some positive associated with that. They're basically saying with our current combined EBITDA, everything's going to be at about a 12x, which is not too awful. They have $25 million kind of incentives with performance, etc. So total purchase price, $1.8 billion, but a lot of that being in cash. So if you look at it, they're issuing some debt, they're using some cash, they're using unrestricted cash, some cash used for the transaction. So they're coming out with $515 million in cash, $384 million in debt, and they're going to be close to generating a huge amount of total EBITDA. So I mean, you think about it, if you look on this slide, combined, they're going to be combined making $255 million. So in terms of a net debt to EBITDA, still very favorable. And then if you think about the synergies, whether or not they get the synergies or not associated with this, sorry, this is the wrong one. Whether or not they get the synergies or not, sorry, $340 million combined. If they get this $50 million in synergies is what they're forecasting, it'll be close to $400 million in terms of EBITDA, which is less than the new debt they just issued. So in terms of the new debt, and I don't think that Celsius had any debt, but overall, if you looked at the total debt that the company is now taking on, it's a 1x price, net debt to EBITDA, which grand scheme of things is not bad. They'll probably pay that off very quickly. and or not, use it slowly over time. It's okay to have debt, especially 1x net debt to EBITDA. Means you could pay that off within a year if you really wanted to, if there's no other capex or anything like that in the company. So it's very low in terms of leverage. You're looking pretty favorable on this. And so I don't think it's necessarily a bad thing, especially the fact that you're only diluting shareholders by like 8% or something they said. So let's go back to this graphic they said here. Yeah, so attractive valuation, less than 3x Alani Nu 2024 revenue of 595. So they're buying it for 3x price to sales, approximately 12x fully synergized Alani Nu adjusted EBITDA of 137. But keep in mind, they're just getting started, so this EBITDA will grow as they kind of get into maturity, right? EBITDA for Celsius, a couple of years ago wasn't that great either. So if you look at this, their adjusted EBITDA, let's just do some quick math. And this is where they're getting to, your EBITDA margins are not necessarily as close to Monster's, etc. So they're at 137 million in terms of adjusted EBITDA for 24 divided by 595. So they're at a 23% adjusted EBITDA margin. So whether that, what's the adjusted part, I guess is what I'd be kind of curious about. But let's see. This includes the $50 million synergies post close. So if you were to take that out, so 137 minus the 50, I guess they really only made 87. Key point there, 595. So that's a 15% adjusted EBITDA margin. So what they're assuming is if they're able to get $50 million in synergies, meaning reducing SG&A, reducing a lot of these other things that are going to be an impact and drag on the stock, because you're going to be able to have multiple salespeople, or sorry, you're going to be able to shrink the sales force. Let's say you have 1,000 salespeople between the two companies. You might only need 700. Yes, it's a bigger company, but you can sell both products under the same hat or same district, etc. So you don't need as many salespeople, if that makes sense. You don't need double the salespeople. So that's kind of the thought process is, you don't necessarily need to have double the facilities, so in that respect, you'll hopefully be able to combine some of the outputs of some of the factories, all that stuff. I mean, this is hypothetical stuff. I don't know exactly what kind of synergies they're looking for, but it just goes to show there's going to be restructuring charges. They noted that, and I think that was part of the reason why there was GAAP EPS negative 11 cents, partly this lawsuit, partly the restructuring charges. So there's that piece. And then what is this? Yes. Newly issued shares of 8.7%. So in the whole grand scheme of things, with all this going on, 1.275 million in cash, 25 million earnout, 500 million or so in new Celsius shares, only diluting by 8.7%. Meanwhile, you're getting 80 odd million in EBITDA, actually probably closer to 130 is what they're saying. If you add a multiple to that, let's just say it's the 80 something, right? 80 something, and we know we were getting close to 20x price to EBITDA. That's 1.6 billion. It's about what they paid, right? So they're not stupid here. Now, if you think about the synergies with this, the 1.37 times that by 20, that's a $2.7 billion addition. So you're adding $2.7 billion worth of market cap essentially, but you only paid 1.8. I don't think it's a bad deal, man. Like, could it have been better? Did they get a steal? No, they didn't get an absolute steal. But to be very frank, like, the company's growing pretty expansively. I think it's great to have a female-focused energy drink. I think that that's what Celsius previously was. I think that that's part of the reason why Celsius did so well for quite some time. And I think that as Alani has grown, they've actually taken market share from Celsius. So I think a lot of this dip over the past few quarters has actually been Alani. And Chris and I have talked about this on many episodes of Cash Flow Chronicles. And Chris has said, yes. I mean, remember, we were talking about this in 2023 through 2024. And Chris was like, you know what? I'm seeing less and less. I'm seeing more, people picking up other things. There's other competition, etc. You've seen Monster buy out Rain. You've seen them obviously own NOS now. You see a lot of these other energy companies combining. And so I think it's prudent. It's really going to consolidate into Red Bull, which is this top one, 37% market share. Monster, which is this 27% market share, and this 12% market share, which should grow to 16, 17% with Alani Nu. And really, they're going after Monster. So whether or not they can actually, kick it up and get close to 20% market share, the thing that I'm sitting on in terms of this, so let's just kick it back to how does this relate to what happened with me. So I've been buying a couple hundred shares here and there, not a couple hundred shares here and there. I bought a couple hundred shares, 400 shares or so. That's probably not a surprise. I've written about the stock. I've talked about the stock. I've told people that I think it was going to be in reversal. Do I think it warrants a reversal with the earnings? I don't think the earnings itself was that great. I'm kind of surprised. I didn't think that you would have negative year-over-year growth. I thought it would be at least flat. So, we'll talk about that in a second. I'm happy that the stock popped. Obviously, that means good things for me. I bought the 2025. Sorry, not the 2025. I bought the $20 calls, $25 calls. Let me share this. I'll show you guys what they're. So I'm not going to share publicly the what I think that they're going to be worth tomorrow, but I bought these. Did I buy the March 21st? Let me just double check. Let me just make sure I'm not sharing. Yeah, so I bought the March 21st. $25 boys. So these did not close for me at $3. They closed for me at $2.90. So pretty close. So I bought these for $2.65. So my break even was about 27.5 cents. I bought some contracts. I'm not going to say how much, but I bought enough where it's meaningful enough. For me, it was bigger than a gain. I normally don't play earnings, but I had very strong conviction, just like I had with SMCI. So for this one, I was pretty surprised that it went north of 30. I was thinking 30 was on the table. Was I thinking north of 30 was on the table? Probably not so much. So yeah, that was interesting to kind of see that kind of play through. So the fact that we're 35 is a little bit crazy. That being said, let me just read through what else I have. So I have the 400 shares underlying. What I did with those, I don't really know. I bought the $25 calls for March next month. So probably when the market opens tomorrow, I'll sell those. I had some covered calls on my my Celsius shares at 45. That seems like it's going to be good. That was for March next month. So hopefully that deflates. They were already up 20%, but as earnings went, hopefully it shrinks a little bit more. I had some April $25 puts. Those were 5% down. So, not more than $100 or so. $35 puts as well for April, because I thought we would have a rebound and I wanted to capture some of that rebound. That was 6% down. So hopefully those will come back into the money. And then I also had, this isn't crazy, I'll just say it, one $35 call for January 2026, because I did anticipate a rebound, and I didn't really want to continue to buy $2,500 lots. So instead I bought a $35 call, and I was down on that. Obviously the stock hasn't been doing too well over the past 6 months or so, and I don't know when I bought it. Probably wasn't 6 months ago, but it was probably within the last 2 to 3 months. So I'm down on that, which is fine. That obviously was $35. That will probably, because it's January 2026, expand very nicely tomorrow. So how I'm going to keep going with this, I don't know. I'm confident that the company will do well, but I'd have to see what the actual market cap is. I'd have to do some work again with kind of a valuation. If it's super low valued, in fact, let's just do it on the fly here. So at $35, We're at a 6 billion. That doesn't make sense. I'll have to do it offline. I have to figure out how many shares outstanding there are, plus the 8.5 additional 8.5% additional shares at the $35 share price. What is that market cap valuation? Divide that by the 350 to 400 million in EBITDA that they're expecting for fiscal year 24. Was it? Was that like what they would have made this year? Let me double check. Let me share this again. Okay, so this is the pro forma for 2024. This doesn't include growth next year. They generally don't provide guidance for the forward year. Celsius just doesn't do that. So kind of like what you see is what you got, not what you see is or what we say is what you're going to get. They basically say, this is actually the only time I've seen them forecast anything in the last couple of quarters, which is this 50 million in kind of synergies. So in that respect, I mean, let's just say the company comes out tomorrow. Actually, they probably have Celsius fully diluted shares. Diluted shares. This is going to be off. Everybody does it. So I have about 240 million shares. That makes sense. So 240 million. So let's do the math. All 240 million shares times 35. So that means the company right now, with the shares that it has, 8.4. But I'm assuming that people are taking into account the fact that there's going to be an additional 22.5 million shares. So 262 times 35. So you're looking at a $9 billion valuation. So you're at 9 billion. So 9,000 divided by, let's just say you get to this 342. Let's just say things stay flat. You're talking about 26x price to EBITDA. Now, if you're talking about, the 9 billion equivalent divided by the 392, talking about a 23x price to EBITDA. Now, I'm not concerned with a 23x price to EBITDA. I'm not. But at the same time, obviously I can't hold my March calls. So I'll have to sell those, right? And do I want to risk giving up a couple 100% gain on that? Probably not. So I'll probably just, whenever the market opens tomorrow, I actually probably will try to calculate what I think it'll be worth and just have it at the open. And if I can get it, I can get it, but I'll be watching it like a hawk tomorrow at the open. And hopefully get that price, because who knows, it might sell off. People have been in the stock forever. They're probably, getting just like, I just want to be out, so who knows what the hell is going to happen. It looks like the algorithms favor this favorably. So I'm going to take that opportunity to do that. What I do with the rest of my stuff, like my shares and stuff, and like my 2026 January, I don't know, because 9 billion, I mean, it's not 22x, 24x price to EBITDA, not cheap. But let's say Alani grows again. Like, let's say they add another 300 or so million in revenue like they did last year. Like, that's not something you don't want to be a part of, because that's, if you think about it, let's just do the math. They add another 300 million. So they add 300 million. We know they were at least at a 15% EBITDA margin. That's 45 million in EBITDA that they would add. Multiply that by 20. That's another $1 billion in market cap they would add. And that's not including what potentially Celsius could do. So, you're starting to think, let's say, they add another 40 million here, and then Celsius adds, let's say, another, 40 million. Then you're talking about another 2 billion. It's like, okay, then you're talking about 450 to 500 million in EBITDA at that respect. And now you're talking about, should the company be really worth 10 to 11 billion? So it just goes to show you, how you can start to value these things. Now, of course, who's to say that the price to EBITDA doesn't shrink? So there's that. I haven't had an opportunity to digest Nu. I saw that it was down. Upset a little bit about that, but I know that Nu. I knew I got into Nu a little bit early. One, and then two, knew that it was going to be a ride. Like I know it wasn't going to be straight up the whole time. All right, let's just answer some questions. I'm not going to plan to be here forever, but shout out to the folks that got into the gamble with me. It really was a gamble. You never know necessarily what's going to happen. The company could have had a double beat, and it still might open up down tomorrow. But I'm cautiously optimistic it'll do really well. Yes, Monster and C4. I'll have to double check that one. I don't know. Let's see. We got Hot Tesla in here. We got Clapping Cheeks. Let's see. Celsius already the most female type of drink out there. Consider both the design. Yeah, so that was one thing. Like it felt like it was losing a little bit of its what's the word I'm looking for? Sway with the females, and they were going towards Alani. So Hot Tevitz, man, yeah, he might like it. He might like it. Fuji apple's good. I've been getting the strawberry pomegranate, strawberry passion fruit. That one's not bad. That one is not bad. Yeah, they were selling big distributors cheap just to get rid of it. Yep. I don't have any thoughts. I haven't digested it yet. I was mostly focusing on Celsius. My thoughts initially were for Nu, at least from what I saw, it was down like 7-8% in the mid 12s, if I remember. That's about when I bought my leaps, and now it's on the low 12s. So who knows? Maybe with some of my profits, depending on what the options contracts look like tomorrow, and I'll probably take the opportunity later tonight or tomorrow to digest on what happened with Nu. Do I really want to go into that right now? I would feel bad to like cut it off midway. But based off what I know, Nu is going to be growing pretty substantially. But like I said, I haven't had the opportunity to digest the earnings call as of yet. It was down bad. 9% is not that bad, but yeah. Yeah. I mean, I was kind of liking how I was getting closer to 14. But it's been pulling back a little bit. It kind of looked like a no-brainer, right? Like you had this big V shape. And obviously you're kind of pulling back a good bit. So we'll see. We will see. Maybe people will open up tomorrow and say it wasn't that big of a deal, or maybe it'll continue to sell off. You never know. Let's see. But all right, I don't want to take up too much of your guys' time. I appreciate the 96 of you guys. I know Tanner is also streaming as well. He might still be streaming about Nubank. So if you guys are interested, go check out his channel. Tanner's a good friend of the channel. He does a good job. Sometimes I go onto a stream. I'm like, am I watching Superman, Clark Kent, or am I watching, Gentleman's Quarterly photo shoot, or is this one of the best finance channels on YouTube? It always ends up being like a kind of a combination of all three, but mostly, probably like 80% one of the best finance channels on YouTube. The other 20% thinking I'm watching Clark Kent and Gentleman's Quarterly photo shoot. So hope you guys enjoy. Let me know if you guys have any questions about anything. At some point tonight, tomorrow, or this weekend, I will be doing the options 101 kind of class. I know Amit did one. He did a good job. I just want to focus a little bit more specifically on leaps. It seems like, or like not leaps, but just buying calls. It seems like a lot of people are, from what I've seen and getting DMs from Patreon, YouTube members, is very much confusion about what premium is and why you would pay it and things like. And it's very important because I used to think the same, right? I used to be like, oh, it's gonna be X, Y, and Z. But what I've recognized is like there's so much of a time component to things, which is why I did so well on this one, right? I literally looked not on New, but on Celsius. I literally looked and I was like, if this moves, where would it move to? And so what some people might have initially thought is like, oh, I'm gonna buy the 35. Well, it's like, well, you buy the 35, there's going to be a bunch of premium that is now, deflated. Are you actually going to end up making a decent profit? Versus me, I bought the 25s. So I was like, okay, the difference between the 25 break even and the 35 break even is X, right? Like my break even was $27. I was like, this thing could go to 30, maybe slightly north of that. I want to be in that category. Like if I think it's honestly going to move 10, 20%, I want to be there. Versus if you were to have bought, this is a prime example. Let's pull it up. Little teaching lesson. But yes, the options thing will be Patreon and YouTube member exclusive. So I promised them I would share that. Maybe at a later date, I'll share the link, but it'll be months down the road. But where we closed at was for this 35. You would have paid 60 cents. So your break even would have been 35.60 for this break even. In this case, 35.55. So here we are, 35.22. I'm sure this will go up. Like I'm sure this will probably be still a couple dollars or something like that. But there's going to be massive IV crush associated with this versus where I was at. If you look at it, I was at 27.65 when I bought mine. So I bought these 25s here, and so we're way above that. So you can start to say, well, if you're just taking intrinsic value, you could take $35 minus what this break even is, and that's kind of my profit margin, and then multiply that by however many contracts. So let's just say 35 minus $28, that's $7 a contract. Multiply by however many contracts I had. You kind of get an idea as to how much I made off of this. And you can kind of say just alone, right? I won't show the exact, numbers or anything like that. But let's just say it is $3, per contract here. Let me share this screen rather than, yeah. Get rid of this. So you got the 35. Let's just say I paid $3 for the contract. That's $7. So let's just say the break even was $28, right? 25 plus 3, as you can kind of see on the screen. The 25 over here for the strike plus the 3. Break even be about $28. We're obviously at 35 now. Hopefully we can hold that. But you could say, okay, 7 is kind of your intrinsic value. Now, of course, it's for March, so it might be more than 7. It might be 8, 9. I don't really know. We're just after earnings. So, but in terms of intrinsic value, right? Like if the stock were to close in a month from now at $35 at March 21st, then the intrinsic value of that would be $7 in this particular case. Actually, the intrinsic would be more than that. It would be $10, but I paid $3. So $10 of intrinsic minus the $3. So let's just see the $7 of profit divided by the 3 that I paid. It's 233x, 2.33x rather. So 230%. Or you can do it this way. The intrinsic value is 10. I paid 3. That's a 3.33 total. You subtract 1 because obviously we're divided by 3. You have to remove the cost basis. 233. Let's multiply this by 100, make it 233. So however much money I put in, it'll be at least 233, probably closer to 250%. I don't normally gamble like this. It was a fun opportunity. The reason why I was laughing is because SMCI obviously did well with that. And then this one, it like the market has to turn over, like in point blankness of where my head is at. Like money is just too easy to make right now. It feels stupid. I'm gonna take some risk off the table. Probably leave some of my things on, like some of my leaps and stuff like that. But like some of the stuff, like I'm just gonna be prepared. Gonna be prepared. Like if I buy stuff, it'll be shares, and it's just money is just too easy to make right now. So, or if I do buy leaps, I'm gonna wait for a pullback. Like for example, Rocket Lab, a good one to bought today was the $15-17, maybe even the $20 leaps for January 2020. So if there's a big pullback, we can get more of this in the options chat that we have later. But to me, if you're very convicted that an opportunity is going to move in the right direction, it's the mathematics are easy. Like we've been talking about it in my chat for a little bit, but it's like if you really want to know, like if you say I'm going to put $10,000 into this, how much would I get with shares? How much would I get with options? You can kind of calculate it. It's not going to be. And I did the same thing with SMCI, and I did the same thing with Celsius. I was like, you can kind of calculate, like, should I just buy the shares or should I actually buy these contracts? And the thing that's nice about shares is you kind of have that equity position, right? And like, for example, if I bought, when I did buy the $25 Celsius contracts today, had it gone to $20 and it opened tomorrow at $20, like those contracts would probably be worth like 50 to 60% less than what I bought them for today. But if you had bought shares, you would still have, maybe only be down 15%. So you have to think like, what do you want to do? Now, of course, if I were to, so let's just say bought 1,000 shares of Celsius at $25, it would have been worth 25 grand. But think about how many contracts I could buy with options. In this particular case, 25,000 for the $25 contracts that I bought. Let's just say I had 25 grand that I wanted to buy 1,000 shares, but I could have bought, I don't know what that is, 250 contracts. Let's see. 25,000 divided by 300. No, 83 contracts. So you can buy 1,000 shares or 83 contracts. 83 contracts is the equivalent of buying 8,300 shares or controlling 8,300 shares. So it's like, the leverage aspect of it is much greater, right? Had I bought, however many shares I bought, it would have been, instead of the contracts I had bought the shares, I wouldn't be able to have bought nearly as many shares. And yes, it would have still gone up, 30 odd percent as we see here, but I'd only be up 30% on my money comparatively to, like we just discussed, 230 odd percent that I'm up on my money. So that leverage aspect really helps you, and you can calculate that. And that's what we'll talk about in Options 101. Anyway, I didn't mean to go down on that tangent. Hopefully that's helpful for people. I'm not seeing anybody comment anything. So hopefully they're just entrenched in what I'm saying, if entrenched is the right word. Entrained? I don't know what the right word is. I'm not good with English. I'm good with numbers. So hopefully that helps. But yes, the risk associated with these things, like I stated, is something you have to quantify, right? And I don't think a lot of people do. I think they just assume it's always going to go up. But anyway, you guys rock. I appreciate you. Thank you to the 76 of you. I know, hey, Miss Kelly, how are you? Hot Junebug is still here. Ray's still here. So hopefully that was helpful. Yeah, it's more than happy to chat about options and give that class. That'll be fun. I'm still trying to decide if I'm just going to pre-record it or do do a live. We'll see. But that should be in the next day or two. I've been meaning to do it over the past few days, and I just keep getting lazy. So hopefully I can knock it out and give you guys that value. By no means am I an expert, so I just want to put that out there. Just part of this is luck, part of this is just taking the opportunity and putting yourself out there. But this easily, like we saw, negative EPS on a GAAP basis, people can interpret that and be like, holy shit, So you never know. This thing could still open up tomorrow down massive. You don't know, just because it shows up. We've seen that before where it shows up great, 30 something percent up in after hours, and it opens up negative for some reason. The market turns, something bad happens. So anyway, hope this helps. Sorry if I just want to state, like, I'm sorry if me laughing or like presenting this seems like, it's just kind of funny. I don't normally do these things, but like SMCI and Celsius, I don't normally do those things. I normally take long calculated bets. You guys generally that have followed the channel know that. I just think it's kind of funny that I was just like, you know what? And somebody, Zach Baker, who's a guy who's a friend of the channel, I've chatted with him. He's like, Matt, you know what you're doing. Have more conviction in yourself. So I'm trying to have a little bit more conviction in myself. And, and I'm trying to learn that, I'm generally a more risk averse kind of guy. So taking a leap, like with Celsius, sorry, not Celsius, with like Palantir, buying so much Palantir, buying so much with Rocket Lab, I'm taking baby steps to be like, okay, it's just money. Like, I'm young, I can still take on a little bit more risk. In the past, I've been said I invest like an old man, like when, I was mostly dividend focused and stuff of the like. And they were right, And so with this, I'm hoping to shave a couple years off and, put it towards something. Like, this might be the start of a nest egg of something I've actually started to think about, which is a very calm dividend portfolio that focuses on vacations and taking my foot off the gas a little bit. Not entirely by any means, but instead of coming out of pocket for vacations, I'd be like, okay, how much is in my dividend account? Anyway, enough about that. You guys rock. I appreciate you all for stopping in and the 900 of you that clicked on X. I appreciate you, the 70 some of you here on YouTube, and the one of you that stuck on Twitch the entire time. Hey, by the way, before I click off, if you guys are actually interested in Twitch, let me bring that up really quick. I don't mind where you view from, and I'm not asking you to switch if you don't watch on Twitch, that's fine. But if you actually prefer to watch on Twitch, but you somehow have found me on YouTube, please do me the favor of watching on there. I eventually would like to monetize that platform as well. We've hit the threshold of followers that we need over there. Now it's just I need consistent viewership of over 3. And generally I get like 1 or 2 people watching on a regular basis. So if you wouldn't mind, if you do like to watch on Twitch, to watch my streams on there, it would be much appreciated as I try to monetize that platform as well. So you guys rock. I appreciate you. I'll talk to you guys soon. Cheers.